What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see more selling across the board as we run into resistance levels in the strong downtrend. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.5% and we did slam into that resistance level which was right around 441, which is our negatively sloping 20 simple moving average. Remember, we're still in a strong confirmed downtrend with all the moving averages stacked to the bear side, so the trend is your friend, so you should be expecting to see reversals near resistance. We're clearly getting a reversal at the 20 simple moving average, but we are still holding up above the 5 EMA, and as you can tell in the short term, the 5 EMA is starting to go positively sloping. So right now I would watch for a breakdown below about 434, and that should start speeding up selling to the downside with the next strong support level at 428. If selling starts to pick up, we could revisit 420, and below 420 we're more than likely making that next leg lower, retesting 411 or fully closing the gap at 400. So with this confirmed bear trend, which is our confirmed downtrend, you still need to be very cautious of more downside because the path of least resistance in any trend is going to be in the direction of the trend, which is still to the downward direction. For the bullish breakouts, we'll need to get a close above our 20 simple moving average, but more importantly, we'll need to close all the way back above the 50 EMA, which is going to require a close above 447. So if you're waiting to get bullish in this market, you need to wait for the bullish breakouts, and then we need to get confirmation that those breakouts are holding. Otherwise, we're just more than likely going to see a false breakout as we continue lower. So either trade with the direction of the trend or set your risk at strong support levels, which are going to be these levels down here that I just gave you. Our bullish breakouts are not yet here and we still have the bear trend, so continue to respect the downtrend and don't try to trade too much against the trend because the highest probability to win a trade is going to usually be in the direction of the trend. So keep that in mind as you trade this market, or as an investor you should just know your critical levels that you're trying to scale in at. In the NASDAQ 100 triple Qs, we were down 1.43% today, and very similar to SPY, we hit those resistance levels. We're in the confirmed downtrend, and those levels did lead to selling. In the triple Qs, we have resistance at 350 and 352, and the bullish breakthroughs will be back above 352 and then closing back up here above about 360. So the triple Qs have plenty more work to go before they reverse the downtrend, and as you can tell, this is very clearly a bear trend. And if we do lose this support level right around 340.8, you're looking for the next legs lower at 334, 329, and then the full gap close at 315. Just like I said in SPY, it's a downtrend until it's not, so continue to respect these resistance levels because the path of least resistance is still going to be lower. In the Dow Jones, we were down about 0.25%, and very similar, we're in the downtrend and we did get rejected at that resistance level at 340. Now the important part with the Dow Jones is that tomorrow is Friday and we do have a weekly confirmed double top if we do close the week below 340. So watch that level very closely because if the bulls are trying to scare away the bears, they're going to want to get a very strong close above that level. The next bullish breakout above 340 will be a close above 344 and then getting up here and closing above 348. To the downside, you have strong support levels at 338, 331.5, 329, and then 322.6. If we start closing below 340, it's going to look more likely like the Dow Jones is trending lower. But if we start to get those bullish breakouts, you still want to keep your eyes on that gap fill above right around 360. In the Russell 2000, we were down 1.18% today, and we're getting very close to retesting that critical resistance level right around 207. If the bulls can close above 207, your next bullish breakout will be a close above 212, and above 212, the small caps will be looking a lot more bullish. To the downside, you have strong support levels at 200 and 197, and if we lose support at 197, look for the small caps to come back down and retest the strong support level at 191. Below that, we're looking very bearish and likely going to start trending towards 170. On the ARKK ETF, we were down 6.36% today, and we can clearly see ARKK got rejected at our 20 simple moving average and continuing the downtrend. This is the same exact look that we could be having in the SPY, the triple Qs, and the Dow Jones. So like I tell you, respect these downtrends because the path of least resistance in these markets is still lower. ARKK has been in a bear market for a prolonged period, so if it loses this support level at $60, it's more than likely going for that next leg lower, which means it's coming all the way down to about 49.7. To the upside, you have resistance at 64, 69, and then right around 77.5. On the VIX, we were down just slightly today, going down 0.78%, so we did see the VIX squeaking a little bit lower as the SPY also fell, so typically you're not going to see that. Usually as the SPY falls, we'll see the VIX go higher, so that will be something we want to pay attention to. But overall, the VIX is above 30 in a bull trend, still above our support trend line, and still making higher highs and higher lows. So this is not a market you just want to throw all caution to the wind. This is a very volatile market, and as I always tell you, volatility does work in both directions. So just because the VIX is above 30 doesn't guarantee that we have to go lower. However, we do have confirmed downtrends and we do have an elevated VIX, so expect more downside until we get confirmation of those bullish breakouts. The VIX will be confirming a bull market below 24, and then the next time the VIX closes below 20. On Bitcoin, we're currently down about 3.5%, and we're finding support right on top of that 5 EMA. And the longer the bulls can hold Bitcoin above the 50 EMA, the more likely the bulls are going to get a bull trend. The 50 EMA of support is right around 41,700, and below that we still do have support at 40,670. If we lose these support levels, we're more than likely coming back down to about 37,000 or 35,000. But so far, it looks like the bulls are taking over control of Bitcoin. So watch for your next bullish breakouts above 46,000 and then 51 and 53,000. On NVDA stock, we were down just over 2% today, and we're still finding support above that level at 236. Your bullish breakout levels are back above 245 and then getting back above 254, and it'll look like a confirmed double bottom the next time we break above 270. To the downside, watch support at 236, 223, and 209. On Tesla stock, we were down 4.61% today, and we see Tesla getting rejected right at that resistance level right around 880, which is our 20 simple moving average. We have the confirmed downtrend, and now we can clearly see it looks like we're going down for that next leg lower. So watch for the critical support level breakdowns below 827, because below this support level, we're likely retesting 763. And below 763, we're continuing the confirmation of this double top look, which means we're revisiting 700, and below that we could still trend towards 592. So you can't get bullish on Tesla until you get bullish breakouts, and the first bullish breakout will be a close above 900. Above 900, we still need to get back over that 50 EMA, which is currently sitting right around 922. Above 922, you need that breakout above 937, and then a retest of strong resistance at 996. All of the momentum is to the downside, so respect the downtrend and watch those support levels. On Apple stock, we were down 0.2% today, and intraday we did see Apple testing that 20 simple moving average, and lo and behold, we did get rejected from resistance. The strong resistance on Apple is right around 168 to 169, so your next bullish breakout will be 2 closes above that level. To the downside, watch for support around 165, 162, and our support trend line is just below 161. And if we lose that support level, we're likely coming down for a retest of 157 or 153. If we do start closing above 169, look for a retest of resistance right around 172 to 176. On the financials, we were down 0.32% today, closing back below the 5 EMA and just a few days away from having the confirmed bear trend once this 20 simple moving average crosses below the 50. We have a lot of support in this level, so if we do start losing support, get the full bear trend, we could be going down for that next leg lower. On the industrials, we were up 0.11% today, and the industrials are starting to look like they're starting to get a bullish breakout. We have the second day in a row above our resistance trend line. However, we are getting rejected currently at the 50 EMA. So the next bullish breakout will be a close above about 101. And above that level, I do think it's possible we get a bull trend and run up there to close that gap at 106. So the next time we get that bullish breakout, look for that possible gap close above. On the healthcare sector, we were up 0.51% today, and the healthcare sector is looking very bullish at these levels. We have 2 days in a row closing above our resistance trend line, and we're now starting to close back above the 50 EMA. If the bulls can hold this breakout look and hold above support, we could run up here to close this gap right around 141. The energy sector was up 0.27% today, and we clearly see the energy sector still looking very strong, with the full bull trend in the bullish price action continuing to make new daily highs. Watch for that next price target right around 74.75. So jumping back over the S&P 500, as you can tell from all of the charts, there are a lot of confirmed downtrends across the market. So you still need to respect the fact that the trend is your friend, and going against the trend is surely the best way to lose money. The highest probability trades go in the direction of the trend. So if you're not trading in the downward direction, make sure you're taking risk on long trades at very strong support levels so that you don't get whipsawed and suffer huge losses in this market. The VIX is still very high, so it's still a very volatile market. And in a volatile market, volatility does work in both directions. So prepare for bull traps and bear traps alike in a very whipsawing market. If you're not willing to trade a volatile market, just wait on the sidelines, and eventually the volatility will subside and you'll have a much less volatile market and a lot more clear direction on where we're going from here. But just respect the fact that we're at resistance, currently seeing selling from resistance in a confirmed downtrend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.